Hello, everyone, and welcome. Welcome back. Just making sure all this is going through okay. Seems to be, so we'll take that. Let me just also make sure everything's sized up here, nice and cool for everyone. How's everyone doing in this insane market? It's been different, that's for sure. Let's open that up and let's just get right into it. Not waste any time. So again, if you guys are new here, what basically we do on this live stream, on top of questions, on top of whatever it is you guys want to talk about, I scan through the markets for the week and I come up with ideas and opinions for what I'm going to be looking at and trading next week. I then go through and go over the short videos, the videos I make daily, talk about how I traded them, if I traded them, if I'm still watching them, that type of thing. And then we scan for the video, what I'm going to make for this weekend's video, and rinse and repeat that all along the way. Feel free to ask questions, shoot the shit, a good chance, I think, just to chat about everything like that. So now let's just get right into it. So first I'm going to start. I just want to make sure everything's sizing here correctly. One moment. Just make sure your guys are seeing what I'm seeing, and all of that is going good. So we can expand this out a little bit, get a little bit more in the screen like that. Perfect. Okay. So first, and I'm going to do more crypto stuff as I trade it more and more. I've been doing a lot of kind of crypto work that you guys haven't been seeing with some other business engagements and partnerships and things like that. But now that I can actually, now that I'm trading it more myself, I can talk about those. The other things I can't really speak too much about. And if you guys have been following me at all on Twitter, I've been talking about this short that I've been taking. Started up here, added a bit here, added a bit here. It's a whole long Twitter thread that you can find on my Twitter. Took the first bit of profit on kind of this drop right here and still holding some short as well, hoping that, this is just kind of a rollover. I may take off a little bit if we can get down to 40,000 on the 200-day moving average, see what happens there. If that breaks, I think that it could be possible to see 30,000 on this one. If we run a little fib on this, we can just grab and just from pretty much anywhere there and pull it out, and you can see why I'm thinking 30,000. That would be the 61.8 retracement of this whole thing, but it's to the point now where I have taken some off the trade and I'm happy with it. And all of that down to the 4-hour chart, which is the closest. I don't look any closer than a 4-hour chart. You can see that this bounce is currently being sold. So the question is, do these lows hold, which are the lows also here as well? So if these hold, this may be maybe a buyable dip, but really not too. I wouldn't be hopping in front of this train myself. Into the weekly chart here, you can see really it's just basing. When you're looking at it on the weekly chart, to be honest, for a currency, which this Bitcoin's trying to be, volatility is going to be bad for it, right? It's just going to be the way it works. We don't want there's logarithmically, we don't want super volatile markets if you're trying to do a currency. And that being said, right, the breakout area was 20,000. So to technically be in an uptrend, this thing could pull back into 20,000 easily and then bounce and still technically be considered an uptrend. So that's my look at crypto before someone brings it up, because I'm sure they will. I did a tweet about how I bought Doge, with the whole a chart is a chart kind of a reference. This pullback, we pulled back into kind of the 71.8 area here. We put in this kind of big engulfing bar. So I'm in a little bit, I have 4,000 Doge. So that's probably, 2,000 American dollars or 3,000 Canadian in it. at this area right here at about 50 cents. Basically just trying to see if this is kind of a 1, 2, 3, 4, and then maybe we hit 5, figure out what to do with it then. So into the markets, one of the first things I always like to look at is these comparison charts. So I guess while we're still talking about crypto, you can see this is the reason that I'm short some currencies and long others, because they're not as correlated as they used to be. If we go back to even 2017, there's a lot more of a correlation there. This chart is just Ethereum over Bitcoin. So it's showing relative under or over performance of these things. Right, so these in through here, ever since Ethereum broke out on a Bitcoin-related basis, this has been huge. So just showing that Ethereum is outperforming Bitcoin. At the same time, a lot of other altcoins are outperforming Bitcoin. And this is kind of the equivalent in my mind of small caps outperforming large cap stocks. It's what you should expect in a market like this. So that's interesting. Next is the growth versus value, which we've been talking about for weeks now. It's been very evident to all of us when February came and people really started struggling. It was because of this. And it's the reason that I've pushed into a lot of lamer stocks. You'll see me talk about a lot of more boring, slower stocks for this very reason, is because the growth stocks, and again, this chart, I should explain these, is a Russell ETF of value over a Russell ETF of growth. So basically, the lower this goes, the more value is outperforming growth. The higher it goes, the more growth is overperforming value. And you can see ever since February where people are kind of having a problem, then it will end up pulling back, right? So it just means the more this trend continues, it just means that the focus is going to be on more boring stock. Things like XLF, XLE, right? Your dirty oils, your retailers, things like this are going to perform better. And, stocks like Tesla and Amazon and all these things are going to perform worse relative to, right? So in this chart, in this scenario, the whole market could be going up, the whole market could be going down. This is just looking at one instrument relative to another. Another one I like to look at here is XLE versus TAN, which is your dirty oil and energies versus your clean oil and energies. And for a very long time, pretty much since 2016, I think, 2017, right? The solar industry has been blowing up relative to the dirty energy. And then since that, we have this kind of rounded bottom going on. So if this continues to move higher, you're going to find EVs, Tesla, and a lot of the SPACs and everything continue to suffer. So that's another one I like to take a look at. I've really gotten into these relative charts more and more. I'm going to credit All Star Charts and JC for this. It's really an interesting way to kind of shift your perspective on the market. This, for example, is a chart of the SPY with consumer staples in it, right? So again, the more this breaks down, the more the boring stuff is going to be more prevalent. And last but not least, I just think this one's interesting. This is the SPY over, or a SPAC ETF over the SPY, just showing the absolute death march of, right? I hear all the time is, trading got really rough in February. Well, February was kind of the top when that value growth breakdown that we saw happen, and it's also the time that this SPAC breakdown has happened. So anyone looking to buy SPACs kind of throughout are having a really rough time. And if you just go to the SPAC index as a whole and you don't look at it versus the market, you can see the same thing, right? A big spike up around mid-February, just back down to where it started. So this is just an index that people created of SPACs. Over here, we just want to, I always like to look at the internals of the market just to see kind of what's going on. This is over the last 5 days. Again, seeing what's outperforming and underperforming. Consumer staples, and when I say consumer staples, think boring, lame stocks, right? Toilet paper, pants, makeup, things that people need, that are right staples. XLF is your financials, your boring financials, because the XLF generally doesn't include, I don't think PayPal, and we can look into this, I don't think things like PayPal and Square or stuff are in XLF. It's just your big boring banks. And materials are outperforming. The things that are doing badly are XLK, right? Your technologies, and XLY, consumer discretionaries. I know that to some people, discretionary and staples are obvious. Just for people who it isn't, who are newer to this, just think for discretionary is shit you don't need, right? Apple, Harley Davidson, things that people buy but you don't need. It's a way to split out retail, whereas consumer staples is going to be more, again, pants, makeup, clothing, this type of thing. So again, the tail of the tape continues. There's been no sign of it pulling back. Things like boring things are doing very well. Cool things, interesting technologies, stuff like this, doing poorly. So when you're looking, look for boring, look for, and also know that those things move less because they're larger market cap, they're less volatile. For example, General Electric, there's nothing that they're going to come out with that's going to propel the stock, to triple, quadruple, quintuple, anything like that, the way a Tesla would. So everything's going to be way more boring. So to combat that, we'll talk about changes I've made to my trading in a little bit. The SPY pulled back this week to this trend line and just bounced off it immediately. I was memeing on Twitter about how everyone was worried about the sky is falling, and then we bounced, and it's just kind of the way, until a trend is violated, you're still in an uptrend. And it's just important to always say, to yourself, I'm still in an uptrend. I'm still in an uptrend, right? It's when that reverses, when that changes, well, that's just bringing in my sound here, making sure you guys aren't hearing the music in my ears. Okay, perfect. That shouldn't be coming through stream, so I don't get clipped. But yeah, so, what do I mean by that? Well, right, every pullback, so this low is higher than this low, which is equal to or slightly higher than this low, which is higher than that low, and that's higher than that low, right? So until you get a pattern of lows being taken out, then I think you're foolish to jump right onto the bear camp. What I would suggest, and what I'm doing now, this low is very, very important. Right? If we fail to make a higher high and then we come back down and we break 400, that's when I will sit up, take notice, and say, okay, maybe it's not just growth and things like this that are the problem. Maybe it's going to be now the entire market. So that's kind of what I'm noting. So I would set a price alert at about the $400 area if you don't watch the SPY constantly. If you're someone who trades while doing other things, then set an alert about 400 in the SPY. If we are above 400 in the SPY, we're still bullish. If we're below 400 in the SPY, now we have to kind of sit up and take notice and say, okay, well, this pattern of higher lows, which has been just, slap you in the face obvious looking back since the pandemic lows, every single time one of these has happened, I've heard on Twitter, I've heard from people that I trade with, the sky is falling, end of the world, oh my God, right? Until that actually reverses, don't be too concerned, right? Below us, we have the 200-day moving average. We could pull back to that, things like that. But, we hit this and we just rocketed higher. So I think what's happening is every time we get a sell-off, you have all these doomsdayers and naysayers and people who don't follow a chart saying it's the end, get out, the world is falling apart, blah, 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 and then we bounce higher, right? So, there's a saying that the market will turn once the last bear is dead, and that may be what's going on here. This is something I've added to my list this week, just a debate I kind of had a little bit internally with some of the traders I work with about, the fact that I didn't think the sky is falling and they did. This is the World Index. So it's just ticker VT, and it's a Vanguard index that tracks a bunch of world ETFs. So this is going to be a general, not just the US, but the entire planet, how it's looking. And you can see it's the same kind of look. We had higher highs all throughout. No reason to run for the hills yet. Watch these highs and watch these lows. Same on this as everything else. Now, as we go through, we can see XLB, which is our materials still very strong. Communications, not as strong. XLE, this one's actually very interesting to me because we noted when we were over here that XLE was actually doing fairly well in comparison to the other industries. And when we were here, we were looking at how XLE may be breaking out relative to solar, relative to clean energy type things. Now, if we look at this chart on an individual basis, we have this nice rounded bottom going on here with equal highs and then this pullback, right? So this to me is kind of looking like a potential cup and handle. We have the cup, we have the handle. If we break out from here, that will be a completion of that cup and handle pattern. So it may be time to pop onto the energy train, pipelines, things like this, oil, natural gas, coal. Again, the dirty, gross polluters that we all hope eventually we figure out a way to get out of, but it's not going to happen overnight, right? And anyone who says, oh, I'm just going to, let's do this thing overnight, it's just not going to happen. So we may have a little bit more strength in this. We are still well below these pandemic highs. You got to think that if people aren't going out, if they're not traveling, they're not using as much energy. So potential move from 50 to 60, and then we'll see what happens there. That's something that's interesting to me. Financials just continue to be strong. Right? The slope of this line in comparison to the slope of the SPY line is really, really good. We had this topping tail, and then we pulled back, and these are just short-term moving averages, this cloud, which is something I'm going to steal for trade ideas as soon as we have that update I like. The green area is just the difference between the 8 and the 20 MA. No reason for those other than it just shows a nice band of bullishness. We got into that. Away we go. XLI, industrials, same thing. The only other one I wanted to look at was XLK, just to show the underperformance. So this may be more obvious to some people than those relative comparison graphs. So I just want to show here is technologies. Here is fun stuff. And then consumer staples. No, that's communications. Do I have a... What is the consumer staples ETF? I'm blanking. XLP, sorry. So yeah, right. So look at this. This is technology. This is boring stuff. And there's an obvious divergence going on between the two of those. Same with utilities, right? Held up, not as good as the rest, but held up pretty well. And XLY, which is discretionary. We talked about, right, shit you don't need. iPhones and stuff like that. Underperforming. So, tail of the tape continues. I don't think there's going to be any difference or any change there at all. I think that's just going to kind of be the way that this occurs. Just loosen this up a bit, lower that. Make sure I'm not breaking anything. And that's going to be pretty much it for the market. Nothing has changed since the last week. You would be wild to be focusing still on the high tech, biotechs, big movers, pharmaceuticals, these type of things. And I think you'd be way more worth your time focusing on Macy's and Fossils and Best Buy and boring things, right? And for you TI Strength members, these are the type of things that continue to show up on the algorithm to outperform the markets as a whole. So that's that. Now let us go into the videos I made last week and see, kind of talk about what I did with them, what I may look to change, what I may continue to watch, all of that. And what I'll tell you is, so there's still waiting on a bunch of them. So May 9th, would have that been the first one this week? Was that the beginning of this week? Yeah, so May 9th was blue. Still watching blue, haven't taken it yet. Very much still like this one. Just nothing happened, right? So we were calling it over this line. You can see it never quite got there. Continuing to get tight, continuing to get interesting. This one's a 15% short float. Basically, the plan is if we break out here to take some, and this is where I'm going to talk about the changes I've made to my trading over the last little bit. And that's just very aggressive on the out. Very, very aggressive on the out. Usually, I do live trading videos. I'm going to record some more live trading videos because I think the shift in my trading may be important to newer traders that are learning. I'm taking like 1R on a lot of my positions, but then I am keeping some. And I want to just do a quick example here. So Fastly, which is a growth stock, I bought Fastly after this double doji, right? Doji here. I bought on this candle right here with a stop right under. So again, I'm long here and I've got a stop right here. Right? So that's this risk. At the end of the day, I'm up this, which was like 1.5 or so times my risk. I took 700 shares. I'm out of 600 right away. Just take the money, away I go, because this stuff is happening a lot with these big movers. Now, I kept 100 shares. So my game plan with a lot of these to try to time a recovery in these growth type stocks is to take, right? So I'm in, I take 700 at 42.50 and then I sell 600 at like 46.50, I think. And then I have 100 shares. So I've locked in a couple thousand of profit. I have 100 shares left. I've put the stop and basically said if we close under 40, I'm out. But until then, I'm going to hang on for a long period of time. So I'm using this opportunity, buying these bounces and these scalps to put money in my pocket when I can and hold a very, very small amount. And I'm going to use that to kind of slowly build an investment portfolio. And you know, blue would be a perfect example. So if I took blue, which again, that was the video from last week, that I may actually just make the video from this week too, because it still looks good. And say I buy blue and we get a spike up over a day or two, just so you guys know, I'm out most, just because it's how the market is doing. And you have to adapt to the market. And I never suggest adapting your entire trading strategy. I think that's very complicated. You know, you have to go through a lot of back testing. I always take the same strategies and I just, how quickly am I taking profits and how much? Maybe in the past when I was up 1R or 2Rs, I would take half the position. Well, now I'm taking 90% of the position. So for example, so if we get in, say at 31.5 and we're risking to 30, so we're risking $1.50. So I would take, you know, call it 500 shares to make it easy. I would be out at 1R, 400 shares. I would put a stop kind of under this base and I would just hold that last 100 shares. If we continue to recover, great, I'm in some. If not, I've taken the majority of the profit off of the trade and then I'm just waiting. So that brings me to, and I do see your question about looking at stocks, and we can take tons of time and look at individual names just when I'm done what it is that I'm going through with this weekly routine. So the next one was Antx. And I am in Antx. Called it, well, not called, these are not calls. These are just stocks that I'm watching. I never ever want to get into that calling stuff. So that was the 11th right here. So what I did is I'm not up much. I think I'm in around $5 in this area right here, and it will be the same thing. I already have a target out for about half of the position here, and I've got a target out for I think another bit of the position here. I'm in 4,000. No. 2,500 shares. I'd have to go look. But basically, my plan is to pare down from where I am in to just 300 shares of this $5 stock. I'll have $1,000 of buying power tied up in it. And then I'll put my stop probably under this swing low. And, right, we're going to slowly climb up and do this, and I'll be happy, or it will come stop me out. And again, I'm happy. And this is different from what I'd normally do, in which I would let a moving average or so kind of ride it up. I made a video and some people saw it, but I had to take it down because I forgot to unmute my mic. But Nikola. And so Nikola was on the 12th. I'm just looking at it here. It has 200 views, so some people saw it, so I'll talk about it. Same thing. I'm in Nikola, I believe around $12. So I'm not up much. Same thing. If we can get up into the 13s or 14s, I'll be out most of the position. I'll keep a tiny, tiny amount. If we recover, great. So you can see how my game plan is to kind of build out these portfolios and then take the summer off. MDRX, this one's been great. MDRX mentioned right here, looking at it, oh yeah, on the 13th. I just took this basically right on this pullback on the open the next day. So not into the pullback, but what I did is I waited. We had a pullback earlier in the day as we broke back over this high. That's where I got in. Initial stop kind of right down here. And it's one of those, if it comes back and gets me, it's trading. I'm wrong on nearly half my trades. However, I very much like this kind of rounded bottom here on this incredibly strong stock. So if we hold above this area, I think that's great. We're going to push back up. And again, the game plan will be the same. I'm going to target just under these highs and see if I can get a majority of the position off. And then if there's a recovery in these type of growth names, fantastic. I'm involved in a small amount. In a perfect world for me, I've got like 10 or 20 of these stocks in like the next month as I keep adding into them. And then I can just hopefully ride that recovery of the growth names if and when it occurs. Last but not least is GoGo. And I did take GoGo. I think I'm just about flat on it. I think I got this at like 1180, 1190. Same type of look. I'm going to pop this in. This is a pure, what people are calling recovery trade, where, GoGo, if you don't know, they make the wireless for airplanes. So it's if life's getting back to normal and people getting vaccinated and all this stuff, that would be great. Oh, I see, Raz, broken stream. Is the stream broken? Is my stream broken? I hope my stream's not broken. It's yours. No. Okay. Thank you. Works for me. Okay. Good to go. Just thank you. I like it. It's that guy's internet kind of thing, but if it breaks, let me know. Just shouldn't, right? I've got a big old powerful monster. These M1 Max, I'm telling you, man, they're insane. But so that's it. That's the 4 or the 5. Again, Nikola, I was embarrassed because I had it up there, I think, overnight, and a bunch of people like tweeted at me and said, "Hey, man, there's no sound." And it's just right. I do them at the end of the day. I'm usually kind of tired, type of thing. So again, it's a bit of a shift in my trading, but I think it's important because things are just going and slamming back and going and slamming back. And with, for example, Macy's, it was the same thing. I was long Macy's in through here. We got this little pop-up that I sold into, and then it crashes back down. Now maybe is it setting up? maybe earnings is too slow, but it'll be the same thing. Just scalp, scalp, scalp. So, now is the time where we go through and we scan for the next half hours. I am going to talk about the Stats Edge trading product. I actually did get some solid work done on it this weekend. I have something I think I can show you guys without giving anything up, what it will look like, that kind of thing. Squarespace, I guess, actually has, who I make my website with, has member services built into it, which was great, because that's kind of where I was stuck, is how to do it to make sure that, if people, like, I want to give full refunds, I want people to be able to leave at any time. I don't want, I want to be as professional and everything as this as I can. I just see a question. Oh, it says M1. Yeah, so the M1 processor, basically Apple is dumping Intel. They're making their own processors, and I'm a massive Apple nerd. I just like everything works together, so I can leave this room and anyway, tech nerd stuff. So anyway, I've got a Mac Mini and a MacBook Air, and I had a 15-inch MacBook, which I think cost me in the neighborhood of $4,000 for my laptop. Before, and this little $700-800 Mac Mini can do 10 times what it is, and I don't even know if it's on. Like there's no fan, there's no nothing. Same with the MacBook. The battery lasts for like 12 hours. They're easy, and they're just super quick. I'm super impressed, for sure. So let's start scanning. So there's one guy who wanted me to look at an ESPR. I see there, Jeremy. Okay, ESPR. It's a downtrend, right? It's, I would watch these lows and see, can it get up there? Is it going to coil down? You mentioned, I think, that you bought on the earnings. So you're up, right? If you bought on the earnings dip right there, you're up 20% or 10%. It's better than kicking the teeth, right? But I would, it's obviously been downtrending for a while and the earnings were not good. So you're fighting whatever that is. You can't lose at this point. I wouldn't. I need to make sure I frame I don't want Guru Leaks to come fucking eat me or something. So I would not lose on this trade. If I bought into this earnings gap at 20, I would probably just put a stop at 20. Depending on how much you have, take part out. These, the moving averages are catching up. A revision to the mean trade, it looks like you did a good job. That you're going to have this overhead supply. Anytime you get into the gap, and I'll talk about this, I think the psychology is important. Always imagine you're the other guy. And this is why I think lawyers might actually have a fun time trading, because they have to argue both points. But so imagine you're this guy where I drew this arrow. Imagine you're that guy. You bought before earnings. And you're like, okay, well, look, it's at support. I'm going to buy before earnings. I think earnings are going to be good. Oh, crap, I'm down huge off of earnings. Well, you shouldn't, and we all know as traders, the right move would have been there to maybe, plunk a stop at the low of the day there and say, if I'm out if it goes bad. But what most people will do is they'll say, well, I'm going to hold, and if I ever get back to even, I'll get out. And again, you shouldn't. But now that you know that's what's occurring, then you know that there's a whole bunch of people. Everybody who's up here, everybody is losing money. So there's a whole bunch of bag holders that are up there that if it gets into that range, they're going to say, that's it, I'm out. And what they may be doing, and this is why prior support becomes resistance, this is kind of a good lesson on all market mechanics, is that they may start to sell before then. Say, for example, you bought here and you were down here and you're down, it's going to be different, whatever an uncomfortable amount of money for you. Let's say 10 grand. You're down 10 grand on this trade. And then it starts to climb up and, now I'm down, 5 grand and now I'm down 3 grand. Things are starting to get better. If this starts to turn and then, I'm checking my portfolio and I'm down 10 grand, 5 grand, 3 grand, 2 grand. And then I look again, I'm back down 5 grand. there's more of a likelihood they're going to say, hey, at least I didn't lose 10, I'm out. And that's what may cause second legs, but protect your entry, I guess, is the moral of that story. JE. Same exact thing here, right? If you're long from anywhere in here, you're doing fine. If you're long from anywhere else, you're doing horribly. Is that it? Is that the whole stock? No. Oh, so like as far back as I can see, unless you're long somewhere in here, you're donezo. So, there is, some people play revision to the mean. I don't play revision to the mean. The closest I will do to a revision to the mean is going to be something like this blue, where I'm not buying here, I'm not buying throughout here, I'm not buying throughout here. I'm waiting for it to stop going down. And what that means is sometimes this happens and I just don't get involved, and I'm totally okay with that. However, again, there would be a lot of money to be made buying that low and selling as it rallied. It's just not me, because I want to know I have this. If blue breaks out tomorrow, I know that I could put a stop here. I know that I could put a stop here, and I have qualified my risk. I have personally gotten in a lot of trouble revision to the mean trading, which is why I just don't do it anymore. It's just very hard to quantify that risk. Whereas in, base breaks and pullback trading and breakout trading and all of these other pattern type tradings, or even indicator type trading style, where your stop's going to be. And again, it's important that you guys frame my methodology of trading, where my theory is, and my trading changed dramatically once I was finally able to kind of internalize and unlock this, is that I will never be right probably any more than 60% of the time, ever, right? I'm 35. I hope to be trading until I'm 95. I love it so much. I want to be Ralph Alcampora, right? Who's just still invited to talk and gets paid to look at the markets and all this. That's kind of my goal, because that guy's just going to keep going and keep looking at charts, until the powers of the beast stop him. So now that I know that, and I know that there's never going to be a time that I'm going to be more accurate than 60, 70%. And if you're ever out there and someone says, oh, I'm right 90% of the time, blah, blah, they're just ignore them, run. So now that I know that, then really what's important? Because, say I get to that 60% threshold and I'm right there, and I don't think there's a way I could ever surpass it. And if I do, it's diminishing marginal returns, right? If you're wrong right now 70% of the time, you have to change your trading style. If you're wrong 50% of the time, you're probably doing okay. If you're wrong 45% of the time, you're doing way better. But there's a diminishing marginal utility there, which no one but economics majors and nerds like myself will get, where so say this is the chart, and this is the amount of work you need to do, and this is your win rate percentage, right? To go from, say this is a 20% win percentage, to go from a 20% win percentage to maybe a 40% win percentage, there's not that much work you have to do. You only have to do a little bit of work, right? And then to go from 40 to 50, you got to do way more work. And then to go from 50 to 60, you got to go way more work. And at some point, there's going to be a cap. So as you near that cap, and say that cap is 70%, you're right, 7 out of 10 trades. And that's where like the theoretical limit is. Well, I would say probably when you're at the 50-50 to 60% area, you're good to stop pushing for more and more wins. What you need to then look at is, how do I make more out of my winners, right? How do I identify the losers quicker, and how do I stay with the winners longer while, not letting this regress lower? I don't know, maybe the visual makes sense. So I'm in that stage where I'm like, okay, I'm right more often than I'm wrong. I could get a little bit better. I'm not going to focus there. Where I'm going to focus is on risk reward. And that's why I just wanted to frame that to say, whenever you guys ask me about a stock, that's how I look at it. I'm not looking at blue, because blue is going to be one of, hopefully, if I'm able to be Ralph Alcampora. And again, if you don't know who he is, he's like the godfather of technical analysis. Look him up. A super nice guy. I've met him as well. If I'm planning on doing this when I'm 70, 80, 90, because I enjoy it so much, I will never remember blue. I just won't remember this trade. I'll probably remember my worst trade ever, and I'll remember my best trade ever, and then everything else in the middle is just fugazi, right? Just who cares? So when I always look at a trade, I in my head say, what would happen if I did that 1,000 times? Because we get caught in the moment, and we get caught in the, I need to make this trade work, and I need to figure out a way to make this individual trade a thing to make me money, because then when I make money, I'm fine. But for me, it's the process. And that's why the Stats Edge trading product that I'm going to show you isn't calls. I don't want to do calls. I never want to do calls. I want to do, here's my process. Come join me for however long you think you need to be here. And then when you're done, leave going on your own thing, because hopefully you've built your own process by looking into my process long enough. So something like blue, I'm like, okay, well, if blue breaks out here and I take this trade 1,000 times and I target 1.5 or 2 times my risk or whatever on a big base like this, I think if I do that 1,000 times, I end up making money. And that's it. So when it comes to these stocks like HAE, and I look at this, I say, if I buy a stock that is just plummeted from 150 down to 50, I don't think I can pull that off 1,000 times in order to do well. Now you could say, well, you could buy it here and you could put your stop under there, and that's fine. But I think you're probably not over the 50-50 area with that. So again, I come up with a plan. I scan for things based off that plan. I go from there. Argen, same kind of thing, right? Now Argen, you've got a bit of support at least. You're not, and support on the chart kind of thing. I just don't, I want to be looking at, things with either longer bases to participate, or I want to be looking at, things like this that are doing well, right? SP, Spark Energy. So it's an energy distribution company, right? This thing's doing fine. It had earnings. Maybe that was earnings. I don't know. But it's not tanking. And this is the whole concept with, let's go to the TI strength alerts. The whole concept, the whole reason I wrote this the way that I did, and I built this algorithm, is because it's going to find things that are working in this market. So, for example, where's BAM, right? So let's look at HAE, right? Just absolute shit kicking from 140 down to 56. Or you could buy BAM, that's just been in that same time grinding higher. If you're an options trader, maybe you could be selling puts or credit spreads or something like that. Best Buy, for example, right? Best Buy, I was in and out of this thing. It was alerted right here. We had like a 10% move in that day. Just like I talked about, I took out most of my position, kept 100 shares, was stopped out, I think, on this day, halfway through. Overall good trade. But again, you can see the trend of this versus the trend of an HAE or an Argen, right? And again, these Argens and HAEs and stuff, these are on the growth side of things, right? And as we went through, let's go back and do our growth versus value, right? So you're investing in the side of this chart that's pushing it lower instead of the side of this chart that's pushing it higher, right? Hope that Hope my rantings make sense. So I see both from Vlad and Brett there. My problem is staying with losers longer than my winners. That's the, I would argue, and again, it goes back to the fact that I think that there's that theoretical cap of 60% win rate or 70% win rate, whatever you want to call it. That, just knowing that. So let's accept that argument as fact, right? Let's say that there's no trader that consistently can beat the market or consistently win on trades more than 75% of the time. Let's just, I know you could argue and whatever. Let's accept that as fact. So then that means that part of the trading is fairly easy. The hard part is the exit. And the hard part for me is still the exit. And you notice that when I said, hey, the market's changing, I'm making this adjustment, that adjustment was solely based on exits. I'm still trading the same patterns. I'm still trading the same style. It's just I was, just like everyone else, February, March, getting kicked, right? I got kicked in February. I got kicked in March. April was flattish to a little bit up, and May I'm doing very well. And the difference is just that switch, right? Instead of going for 2-to-1 risk reward and being right 60% of the time, I'm going for like a 1-to-1 risk reward, being right 60% of the time, holding that last little bit in case we get a recovery. And it will be the same if we ever get into a full-on bear market. If we're in a full-on bear market, I'm still going to be trading the same things, maybe more inverse ETF to trade that, because I do a lot of my trading in retirement account because I've got other sources of income, blah, blah, blah. No one cares. However, it's one of those things that you need to be able to stick and move, but I don't think you should stick and move from your setups, because those are the hardest things to learn. I think you got to stick and move from risk management point of view. And again, there's always bull market somewhere, and that's where things like Trade Ideas and TrendSpider and TradingView, you can scan for things like that. For example, let's get rid of RSI. I don't use this anymore. I was playing with the RSI divergence. I think I've determined that I don't find that interesting, and I should remove it from everything. Let's make it green. Let's put in the 200-day moving average. So a very simple scan to make sure you're on the right side of the market is you could just say, I want things above the 200-day moving average. Now, I use a 20-day, and that's what this blue line here is, a 20-day moving average, and I want to see things above that, and I want to see them above the 8 because that's my time frame. But again, to stick with strength, that's a benefit, I think, of moving averages for sure. All right, now let's go through and let's see if we can find something to put on the list. NLS was interesting to me because this one was on the list before. I think this may profit from a Peloton shit kicking kind of thing. That brings up a good point I'll talk about in a second. 18% short float, earnings out of the way, still holding this kind of upward ascending triangle. So a break of that maybe gets us to 20. We've got into this base here. So it does have a lot of room before we're kind of in bag holder territory. I'd like to see something a little stronger, especially in this market. But yeah, a comment on uses stochastic, RSI, and MACD. That's a lot. On a shorter term chart, keep you in trades. That's one way to do it. Another way is a simple moving average in which so for example, I use this orange one is the 8 and the blue one's a 20. Again, no magic. I just think your moving average should match your time frame if you're going to use one. So if you're an investor, you don't want a 10-period moving average. If you're just looking at long-term investments, if you're someone who holds something for a couple days to a couple weeks, you want to be looking at that kind of, an 8 EMA is basically 2 weeks of trading, and a 20 SMA, 8 EMA is going to be one-ish week of trading between 1 and 2, and the 20 period is going to be about a month. of trading. So, if you're above those, it means you're above kind of the 2-week average, the 1 to 2 week average, and the month average. Oh, RSI stochastic, yeah. But, the simplest way I could build an exit strategy, and one that I use when things are actually trending, is just look for a close above or below one of those moving averages. So, for example, and this is just the easiest way to get out. Now, in choppy markets like this, it won't work as well. But, say you're a god, right? Say you bought SM right here, and you want to say, I want to make sure I stay in this as long as I can. If you're a very short-term trader, you could say, I want a close below the 8-period moving average, which would happen right here in that area. If you're a little longer-term trader, you say, hey, I want to close below the 20-period moving average. And then you're up here. And that's a perfectly fine way to, in my opinion, to just say that's going to be my exit. Because the beauty of it, if you see right down here when you entered, if you just set a close below the 20-period moving average, well, you're risking a very small amount to make a potentially much larger amount to a potential insane amount. And again, this is probably not a good case for this because this one moved so much in a direction, but it is quite often how I'll exit, where I'll just say, okay, stop below this moving average if we get there, and if not, we'll keep her going. This Express Scripts is interesting, but this is part of the GameStop crap, right? And full disclosure, I am out of GameStop, and I actually bought some puts on GameStop yesterday. Moral of the story, and I tweeted about this, is we have this trend line coming up, and this trend line has acted pretty good, and then we broke down from it. We're coming back to test the bottom, and we put in a doji Friday. So I picked up, $1,000, $2,000 worth, I think, of puts. So if the thing just goes crazy and moons, I'll lose that on the position. But if it moves, I'm obviously going to stop out at my risk tolerance if I can. But the reason I like puts on something like this or options on something like this is that if it just, if it does this again, that position will be a full loss. And I bought enough options that if I get stopped out for a full loss, I'm not too worried. Will exit manually or set in TI? I exit manually on swing trades myself. So what I do, and this is something I'm thinking of creating a video series called The Last Hour Trader, where I come up with a lot of strategies that I can just execute in that last hour and either turn on the stream or turn on a recording and just record the entry and exit of all the positions during the last hour, and then my scanning for what I'm going to do the next day, the last hour, and then kind of go away. Because, like I like to teach is I'm not the guy that says, hey man, you're going to trade for a living instantly and make a whole bunch of money, right? It's just not, I don't lie to people, I guess is another way to put it. It's a long road. It's a hard road. So I want to make sure that I'm developing ways that people can trade while they work. Because that's where I think everyone should start until they get to the point where they're satisfied with their trading results and account size and that kind of stuff. Again, it's WVE is interesting here for a trade. So again, when it comes to bottom picking, I guess this is a perfect example. This has all the same things that I talked about before, where there was bag holders here, there was bag holders here. Oh, I was a bag holder. Oh yeah, I remember. So I bought some WVE in this area. We had a spike up that day. I sold some of the position, and then we gapped down the next day, and I got out the rest at the open right here. I remember that. That hurt a little bit. And now that, I'm not going to buy it on the way down, but now that it's potential we're making a low here, and we're making a higher low here, this one is very interesting to me if this gets over this area. And it's not a revenge trade if enough time has occurred between the trade. But it would be nice because that did definitely cost me, my stop loss was under here. So I was expecting to lose this, and I lost this, and potentially could have been way worse if I didn't exit. So yeah, it was about double or triple what I was expecting to lose. So that's interesting. That one will be one. But so I'll do the same thing, and again, just to talk about the difference, right? So if I'm in it at 621 and I'm betting to, say 550, so I'm risking 70 cents. So that means if we get a 70, 80 cent winner, so what's that, around $7, I'll probably be exiting in this gap fill. I'll probably be exiting most of the position, hold $1,000 or $2,000 worth of the stock. If we get an insane recovery, great. And this will be one of those moments where I'll say, right, 20 period moving average until we get a close on the 20 period on the rest of it, stick with it. So that's one that's interesting. Because that's currently the best one that I saw to make this list. I am also developing a strategy on these recent IPOs looking at anchored VWAP here, which makes this one interesting as well, where it broke above the anchored VWAP and then just kind of chop sideways. Playa Hotels. Interesting. It's it's not a clean looking chart for me. And I should always just quantify. When I say not a clean looking chart, I basically just mean the amount of wicks in the candles. I've been watching this one for months for it to get going. I think it sucked me in once and cost me over 16. Right? If we ever get and hold over 16, we could be looking to go. This one's interesting. Boring stocks. So you notice the ones that are higher they're boring. They're boring stocks. They're lame things because that's what's working in this market, right? I don't like playing them. I like playing the crazy stuff just like you guys, but I made a bet on TTD at KPDI. Yeah, maybe. Again, just not really my thing. And same with TTD, got hammered. Yeah, it's just different trading style. And it's one of those things I will never tell someone with a trading style that is working for them what to do. It's just not my thing. Next gen is interesting. We'll add that one too. I want to make sure that I'm... let me just mute that for now. I want to make sure that I do leave a little time to talk about the Stats Edge trading product just because I actually did work on it this weekend. I'm proud. So this particular scan right here is actually a rounded bottom scan. So it's going to look for revision to the mean trades, but it's going to do it in a way that it's not going to look at stocks that have just gotten hammered. It's going to look at stocks that have gotten hammered and are basing for a while, which is a little bit more my thing. And again, it's a very much... The only time I will tell people what they're doing is wrong in trading is when they can get really hurt. And that's usually from averaging down or taking, risking 10% of your account per trade or something that's, demonstrably a problem. See, it's got to be WVE. It showed up on both scans, right? So that's an omen. It has both the the squeeze and the bottoming formation. Jeez, look at that. It's insane. It's a crazy market. So yeah, I think it's going to be, oh, there's another one I want to watch. These are all therapeutic type companies. So they probably got hammered because we don't need therapeutics with vaccines. I'm thinking. Again, it doesn't matter. Just, I like to make a story. And this last one I scanned through, this is basically just everything that has an insane short float, coupled with being close to its short-term moving average. Can be above, can be below, but it's close to its short-term. And Tootsie Roll looks good there, but that's still part of this. Again, I'm rooting for the kids. I would love to see, even though I own puts on it, I would love to see GameStop go to like 1 million and just rip the face off the entire industry, all the naked shorting and fictional shares and dark pools and all that. Like I'm from a simpler time where there was a market and it had a level 2 and it had a time and sales. And if you wanted to go through the market, you had to go through that market. There was no refreshing and iceberg orders. And so I don't think that they'll do it because I'm an old jaded man who's been in the industry too long. I just think they're up against too much, but I hope they do. I certainly hope they do. Again, just wouldn't bet. All right, so I think we're going to be WVE. TT is interesting, and TT is something that I'm actually looking at, and this is just, I'll preview this strategy when I have it down. Again, it will be part of the Stats Edge trading product that I'm going to talk about in a minute, but this strong move and then a pullback, it's a simple algorithm. Again, I need to test it way more, but the premise is you get a small move that separates you from these two moving averages, and then you get at least 3 candles in a row with lower highs into, but not through, and by that I mean don't close through, under the 20 period moving average. So basically the point is you get a big strong push and then a pullback between these two moving averages that are separated like this. The trade is buying a breakout of here and then your stop under the swing low, right? Targeting 1.5 or 2 times your risk. So you're basically just trying to play this, and it's just a way to quantify it. So, for example, is there anything on this chart? Where did I have I actually had a trade. Let's just use Bitcoin short. And this is a scalping strategy, a little trade that I took, and it's the same premise. It's the reason that I have these ribbons on here, right? So let's go back to here. So same premise, but just to the downside. And here's one to the upside. You get a strong move down. You get consecutively higher lows, right? So the bottom of this cloud would be the 8, and the top of the cloud would be the 20. Into that area, you would short under this low with a stop above this high, and you could see you had a nice little push down there as a trend continuation type of a play. So it just because I saw that would have missed it, but big strong push up, pull back, consecutively lower highs, right? Buy on a break of that, put your stop down there, see if over time it can get back up. Again, just something I'm playing with, preview for you guys. So it will be WVE. That's what I'm going to target. That's what I'm going to look at for next week. That will be the short video coming out, so you guys see it first, which I always just turn off the screen and then do that. Again, let's just see if I can go into pages, and that's a Trading Pro main page, and then do that. So this is just a little teaser of basically what the products are going to look like. And again, feedback and all of that is certainly welcome. That's why I'm capping it. So again, I'm going to cap this at 100 people to begin with, just to make sure that everybody who's here and interested is someone who follows me and likes my style of trading. But again, $49.99 US a month, no lock-in period, leave whenever you want. If you probably do refunds after a week or so. If you're not interested, none of these are filled in yet, but this is going to be just the main thing. You'll sign in to the website with a username and password. Thank you, Squarespace, for dealing with all that for me. There will be my scans, which will be updated every time I develop a new scan or a new algorithm that I like. It will be put in there. If there's custom formulas or anything weird with it, I'll include a little video on setting it up, what it looks for, how I trade it, that type of thing. That will be included. And again, the concept is to constantly update this so that as people, as I change kind of the way I'm doing things, people can see that as well. This trading journal, I may change into just a blog, like a private blog or something, because the plan is I'm going to get up, I'm going to probably take a snapshot of the market and what I'm thinking about the market that day and say, hey, this is what I'm interested in. This is what I think the market's going to do, or what I see in the market today and what I see with the news. And then maybe one at the end of the day with a couple symbols that I'm watching. And then we're going to have a members chat area. Either right now I'm looking at Discord, something like, I looked at Signal and Telegram, and I think they're all kind of the same, but just somewhere that people can have on their phones or whatever. Again, not a Signal service, and I will make that very clear on the sign-up page, but a place that you guys can come and hang out and share ideas and things like that. And I will also have it up during the day on days that I'm trading and, maybe take some screenshots or call some things out or something like that. Again, not a Signal service, but that's kind of what I'm thinking as a way to go there. I'm thinking of maybe adding a Twitter Spaces have a chat. I was looking at that too, because Twitter has some built-in stuff as well. But no, I don't think there's a text chat, and I won't be on voice all day or even very often, just because, again, I've got a bunch of other stuff on the go. But that's kind of what I'm looking at. So that's going to be the premise. I'm going to be one of those people that if I get new ideas and I add things down the road, there won't be like another tier or anything. It will be, this is what it is type of thing. So that will be the product. That will be the monthly price and all of that. And again, I actually made product. Now, if you click on these, nothing happens because I haven't gotten that far, but I got here. So I'm going to count that as a win. And also I've got it set up so that it will pay my PayPal. I'm only going to use PayPal for now. And then again, as things go on, we'll figure that out. It looks like Bitcoin, it might be breaking down. That's good, because this is a large position for me, a large short that I've been working into for a while. So I like the picture for the scans. Yeah, I typed in scan. It's one of those. It's all the free Squarespace stuff. So, okay. So WVE for next week. The growth versus value trade is on still. And make sure if you're just understanding that as you're trading, that growth is still getting just shellacked compared to value. The more boring the stocks, the better. Again, just make sure that you're cognizant of that. How about cash? No, PayPal only. Again, I may add like a Square or something like that down the road, but we're talking about a soft launch, capped at 100. We'll go from there. I'll see what other payment options they have if that becomes a problem. I like PayPal. It's Canada, US, it all works. And they don't offer crypto in Canada, but we'll do that. So, all right. So again, trade safe, everyone. I will have this video up. I'm actually going to put it up on Saturday instead of Sunday. give more people time to watch it. So you'll see that in a second. Again, one of those short 1 minute long videos. I have some plans for some better videos down the road, longer term, educational, edited, all of that. So you'll see that on the channel as well. And it was nice having everybody, and I will talk to you guys later.